And good morning. It is the 17th of January, 2024. It's a little chilly outside. It's about 7 below C here in Central Standard Time. We have had a pretty interesting overnight. As soon as I get organized here, here's our overnight sell-off and continuing lower. Yesterday's regular trading session, so our opening position will be lower out of range again today. You can see on the micro composite over here what yesterday's trade was like, testing lower, just barely testing that FMC VPOC here at 1375, and then actually it was at 12 and a quarter yesterday. Now it's moved a little because of the yesterday's trade. So we go up to go down and down to go up, and we'll see where this is going to shake out. Davos is happening, and I'm sure there's a bunch of brilliant experts going to have a lot of comments about many things that might impact the market. There's a core retail sales today is the major 3-star event at sure what time that is. I was thinking 7:30, but that doesn't make a lot of sense. My old computer, my other workstation restarted and now doesn't want to show me my Snagit stuff. So anyway, have a quick look here at the actual site, which is investing.com. That's what I use for just the calendar. Yeah, it's 07:30 this morning was core retail sales, and there was see what kind of reaction we got out of that. And there you have it. And up, and then when they digested the sale, down she went, I guess. So we will see what we got here today. Let's just look at the core retail stuff. There's the retail sales number. Down, the retrace to the scene of the crime, and then they digest and sell off, I guess. Yesterday was a fairly okay day to trade. I wasn't able to focus on a lot of it, but got 2 trades on the stream there. First trade was a stop, and the second trade was risk neutral with an extended second target. So niched up a couple $100. That's always a nice thing to have happen. This is the configuration for our open this morning. Lower out of range. These are the statistics for price to touch these levels in this opening configuration. And because we're quite lower, there's a lot of stuff up above, right? That's got to go up a little bit. There we go. So we have the full session V volume profile, which is here. This was yesterday's RTH. It will soon open in another 5 minutes. This will reset, and this is the chart volume profile. I only have the VPOC, the darker muted one here is for the full session. There'll be a brighter one that shows up here pretty quick when the regular trading session opens. Then I also track the VWAP, which is, I guess, really the only indicator, and the mid, which is obviously the middle of the range. And there you go. Try to keep this. I find that with Bookmap, you can get wound in too tight and end up, you're looking at a 30-second chart. That's ridiculous. You can't see in my opinion, you can't see the context. You can't see what you need to see. That's why I always have Bookmap on my one monitor, on one of my primary monitor, and then my IRT on the second, Bookmap, IRT, and a couple other monitors with other stuff, but those are the primary trading monitors. Those are two 32-inch 4Ks on a 4-rack setup, a couple of 27 1080p's above that, and then some other ones on the other side with another machine. So there we have it. We're looking to open right on the lows, which would typically suggest responsive buying for a little profit taking. But I'm not sure that's going to be the case. And certainly overnight, the overnight would have been a lovely short to just flop one on and write it down for 30 points. You know, hindsight, that RMT, rear view mirror trading. So clear, hindsight. Anyway. So I'm sort of because of the inclement weather and the Martin Luther King holiday on Monday, there was no school this morning. There is again, so a school run for my wife and daughter. I'm kind of a little bit getting my feet on the ground here again, familiarizing myself with where we were and where we came all night. Open in 2 minutes, and I'll be right back. We're open. Now, this is the full session VPOC, I'm sorry. And this is the current session, which you see is just, it's a bit brighter color. And where am I here? There we go. We'll start tracking those migrating VPOCs. Just easy to spot now, but as the day progresses, they will scroll off the screen, and this makes it a little bit easier. So that stat is out. The IB low's been taken. As I said before, the anticipation would be for some profit taking, but are we? Doesn't look like it. Now set my IRT back to full session. And there we go. So the current session volume profile is reset and charting. Mid, VWAP, POC. And this is full session. So there we have it. One thing I need to do here, I believe, which I'll do on screen, is set up the activate the multi-brackets, which enables the risk neutral trade setup to two contract increments of a 12 tick stop, and first contract is target is 12 ticks positive, and then the second is 24. That gives a risk neutral setup, and then activate that trade. Wrong button. Activate that ability. Make sure the brackets are off. Okay, now we're set up to initiate with a keyboard, and so much for profit taking. Here we go. That opening swing, I don't know, could you call 2 points an opening swing high? I guess you could. And there's the opening swing low. So we are turning around a bit here. So, yeah, down we go. The NQ is definitely in sell-off mode, as is the ES. We've opened gap way down. So gap rules would say that if we don't close the gap early on the session, we would tend to trade in the direction of the gap. Furthermore, if we do close the gap and are accepted back in value, it's a very high probability that we would trade across that value or that range to the value area high, in this case, because we've opened lower. This is all in relationship to yesterday's range and value area. And there was a value area, or yesterday it was not considered a trend day. In a trend day, it's generally thought of as price discovery, so there's not really value because they don't agree on anything. They're busy looking for it. Looks like we're going to keep selling this off, which, eases the possibility of taking a short, my favorite. But I'm still a little apprehensive here, thinking that responsive buying may kick in for a little profit taking. If, stop and think about it. If you were short all night and considerably short, a couple handfuls of points, wouldn't you want to take a little profit off? But another item on my book map is this bluish line here. That's the correlated market of the NQ. And you can see that it's clear off the bottom of the screen. Obviously, the NQ is trading at a much different price point. It's a 16,766, but this is a relative movement. Gives you an idea because the NQ often is correlated with or leads the way a little bit, the ES. I don't know why this keeps happening, but that's kind of irritating. With both, you'll notice coincidentally how the full session VWAP or VPOC, boy, not used to being a broadcaster. I'm used to just kind of thinking. Now we've had the VPOC migration for the current session back up, and they're both aligned at the opening. So, what are they doing? Or did they just pick some pockets? At the moment, we're rotating between about a 7.5 handle range. That's really tight and not very high probability of success in that kind of a rotational period, rotational swings. I don't think there are some more events to happen here. Beige book, retail inventories, 20-year bond auction at noon. FOMC member Williams is speaking at 1400. They're all 1 and 2 star, but in this day and age, especially with Davos going on and the political climate, there can be some random news that shakes everybody up. And you see how how easily or how quickly this VPOC is moving down, up, down, both exactly the same locations. But that's easy for them to do because they're only looking at 7,900 contracts. Up here was 74. So now they can run it back up here and throw 300 more contracts out, and it'll bring it back up there. That's all the POCs are, is the point of control, which is the point with the most number of contracts trading. And that's all there is to it. None of this is magic. The statistics are not magic. They are just calculations based on the opening type over 2000. And I think my study goes back 2009 days. The price levels are just a function of the price, yesterday's historical pricing, and today's. The developing value area low and the developing value area high are today's numbers. The regular trading hours volume point of control is today's number. IB high, IB low are simply the high and the low of the first hour, period. Nothing magic, nothing, mystical. That's all they are. And the names have come along from the volume profile or the market profile days where they used to consider that there was the initial balance, thinking that a lot of the trade and business got done in the first hour. That's pretty much all there is to it. And the regular trading hours mid, that's no big secret. That's the middle of the range right here. So, so there we go. I think that's the mode. Maybe I'm not. Maybe I'm wrong. Yeah. So we are testing the VPOC from below. They haven't been able to get much traction down. NQ has fallen out of bed, so that would suggest to me that we're going to look lower. It's perhaps easier to envision or to visualize over here. Here's our low from yesterday. This is yesterday's regular trading session. Here, let me make that a little smaller. There you go. This is yesterday's regular trading session. The blue or darker blue is the value area. So here's the value area low. There's the value area high from yesterday. Mid VWAP, okay? And the yellow moving around line here is the developing point of control, and the red is the actual point of control. So we have opened gap down from here to here, range. Some people go from close, so it's even bigger gap. The green is the IB, develop is the IB. It will continue to move for the first hour. The IB high has remained constant from the opening swing high, and the IB low is adjusting lower. The POC has migrated down and is here. The developing value area high is there. The developing value area low is there. And that's what it is. That's just how complicated it is. It's all just basic numbers. And trading, if you're trading as a business, it is strictly a statistical business. No gambling involved. You capture and collect data on a specific setup in a specific context, and you calculate the statistical significance of that particular setup. Does it have a positive edge or not? If it does, you take every instance of that trade. The analogy of this is our business, for the trading business, is a casino. The house has a very, very well mathematically defined, statistically significant edge for every game they play, and a very, very precise set of rules around each of those games, and they never change. If somebody wins $100,000, the next hand comes out exactly the same way as the last one. And the probability over the theory, I mean, the concept of how it works is the more samples are added to the data set, or to the, more instances or trades in our case that you take of that specific setup with a positive edge, that percentage will come across the table in the form of profit. Real simple. Simple to say. It's work to do, to establish, to capture the data and calculate, determine that you actually have a statistically significant edge. But it has to be specific context. That's the part that hangs a lot of people up, I think. You can't have a 2-tick stop 1 minute and a 10-tick stop the next, and that negates. Those trades cannot be in the same sample set because they have different parameters. For the for the study, which determines these statistics, the only variable is the open type. Is it higher out of range, higher in range, lower in range, lower out of range? It's only where the open is in relation to the previous range. Has nothing to do with context, has nothing to do with anything else. It just says that in this opening configuration, 71.9% of the time, price will touch the overnight low. Period. And of course, those stats have already taken out, but that's how it works. And that's, if you're going to be a successful trader, you got to not be a gunslinger. You have to realize that this is a business of statistics. If you only have one trade that's a vetted trade, that there's context and the setup, then that's the only trade you take until you got another one properly calculated and vetted. There's some other old adages which say don't diddle in the middle. That's by definition, the point of control is the most traded price. So obviously, if you trade around the point of control anywhere, the probability of being taken out, I think, is magnified. The probability of the very next trade is always 50%, no matter where you are. But you can sort of skew those percentages or the tendency in your favor by having the context and some basic rules in place, like trading around the POC used to be in the market profile days years ago. That was considered retail folly. That's just not a good idea. And the NQ has made a little bit of a bounce back here, and is doing what? I don't know at this point. Let's look over here. So here's our NQ. Boom, boom. Would have been a lovely trade. And we're much more rotational on the ES. Lift that up a little bit so we get a little more context out of it. Another 8 minutes will be in the first 30-minute period will have been on the books. Market profile was 30-minute brackets. That's the simple analogy there. Every bracket is 30 minutes. And with the IB, it was 2 brackets, right? Or the first 1 hour. There's now a new stat developed by someone in the Traders Lab that says there's also an IB 30, which says that the high of the first 30 minutes or low of the first 30 minutes has a very high probability of being extended either way in the second 30 minutes. So that's been dubbed now the IB 30. And I guess the original statistic about the IB high and low being taken out by the regular trading session hours is now referred to as the IB 60, I guess. The Traders Lab is a Bookmap Discord chat room started by a guy named Tom P., who's a straight shooter and I believe a genuine article as far as a professional trader, and has a lot of very good sound logic and advice. Doesn't call trades, does a live stream a day, usually from 10:30 to 12 Central Standard Time. You don't have to be a member of or a subscriber to Bookmap or any of that. You do have to, join their Discord, whatever you call that, club or whatever it is, and then you can go pick out whatever room you want. There's a link to that on the description here. We could be looking at a squeeze getting underway here now. I don't think there's any. No, it's 53. There's no. Should be no. Should be no news events. Both VPOCs migrated up. So that's rather significant. Again, it's much easier for them to move these points of control around early in the session. But traded up over 10 quickly. But you see, it traded from 10,374 to 10,3,450. So 100 and a quarter, 100 and a half contracts, and they could bring it back down here and do it again, and they'll both just come zooming back down. That's the problem with VPOC migration setups and trades in the first or early in the session, in my opinion. and they bring it back down. Coincidentally, bring it back down to where it was before. See how that works? I think I did miss this little jump right here, though. Is he talking, I guess? I don't know what that beeping noise is, but that's kind of irritating. So for me, actually, there's really been no trade setups or triggers at this point. I'll be looking for the IB30, which one would imagine was going to be the IB low. And the unfortunate part of where we are now is there's really no range down to that 58, 61, just three to this obstacle. I'll be right back here in a couple minutes. And so we're going to have to see where we're going to go. Now we've had another VPOC migration down to a previously established level, and they're testing that. Would that be a trigger lower? I don't think so. I'm not sure this is, let's see here, 59. The heck's going on here? We don't seem to be, this doesn't seem to be right. There we go. Okay. Wasn't drawing, missing a couple of candles on my Renko, IRT Renko there. I continually glance back and forth, but I can't switch quick enough on this thing to, get dizzy doing this all day long. Yeah. One thing that is pretty significant over here, I'll point out, is the micro composite. This is today's trade right here, below the old micro composite POC. Haven't been able to get above that. This was yesterday's trade up here to test that one, and now we've gapped down to here. The low of that micro composite is 1975-ish. So we'll see where that goes. I mean, we'll see what kind of impact they're going to have. And so that VPOC migration lower wasn't probably a very good viable trade. And those kind of things need to be taken in absolutely context, right? That's really important. Context is king, or whatever. I mean, look at it's often easier to see the bigger picture. Look, this is simply just a rotational open auction. Now, they may break it out to the bottom side here, but at the moment, we basically have sort of two distributions, but fairly smooth Gaussian distribution. And so we are now in the range of the IB30, which would say that in this second 30-minute period, the IB low or the IB high will be extended. One would suspect the IB low. Okay, but you only have 1 point here. So, or 2 to the VPOC. So, where's that? And when it goes past there, it could run 25 points, but that's not the point. The point is you don't put capital at risk unnecessarily without a good range, risk reward, whatever you want to call it. In my opinion. And all of what I say here, this stream is my video journal. I narrate pretty much continually so that when I review it, I understand what I was thinking. I can, hear what I was thinking and see what I was seeing. This is by no means a trade recommendation and all that. All those disclaimers, which are, past performance is not indicative of future results, and you can lose more trading futures than you have in your account and all that stuff. Suffice to say, the disclaimer is spelled out because of, I guess you have to do that now legally in the description of each stream. And I definitely read that. And nothing that I say here is a trade recommendation to anyone but myself. If I say to myself, I think that looks like a good trade location and I put it on, I'm talking to me. I guess that's suffices. Now we could be speaking of that, we could be entering a mean reversion situation here where we're trading from the outside, kind of the outside in from this liquidity area up here. We could now rotate back down because here's the POC substantially lower within 4 points, so that's within the scale, and they may be going to get a squeeze going and get it up, who knows. But so far the range, and I guess the short answer is, in my view, the range needs to expand, and we need to be we're going to take the IB30 stat on the high apparently. That's so there you go. We've looking at the low all night, and they're going to push the IB high up, which they just did by a tick. So, go figure. The overnight point of control, which, as you see up here now at 85.1, that's always, or pretty much always, I don't think of an instance where it is not the highest statistic for trades in the regular trading session hours, targets from the previous trading session, which is the overnight or the electronic or the extended, whatever you want to call it. So the IB30 was taken right there. This will, IRT, IRT is instantaneous pretty much with their, all the stats and indicators, but then there's a bit of a delay. It pushes to a file which is available to Bookmap Cloud Notes, and that only refreshes about every minute. So there's a little bit of a delay on that movement on Bookmap. What to do. This is the full session VWAP has moved up. VPOC. Sorry. But the current session, the brighter, is still down here at 60. And as we poke our nose up here, we'll be venturing into the gap area for the first time in this regular trading session. So, not that that's a big deal, but the Globex VWAP here, full session. In the older days, when I started this overnight or the full session trading from 1700 at night to 1600 the next afternoon was called Globex. So that's why my naming remains that way. This is the overnight point of control, or the ETH point of control again, and that's quite a bit of liquidity been parked up there for a while. They've now extended that IB high again, and they're getting into the gap. Refill the water bottle here. So what has happened? Well, we tested up. We did the IB 30 to the high side. And now we're back to the overnight VPOC. Whether that will be some indication of something, who the heck knows? It does bring up another point, however, which is that there is a structured trade, VWAP or mid POC. Problem for me is that neither one of them have enough range, just barely the mid range to get the IB neutral scale off. And then, but what's the target? The target would be the IB low, and there's nothing but air below it. There's no statistics down there except a couple of high volume nodes. So that's why it's wait and see for me here today. And I'm sure there's other folks who, some guys I see chats in the T Lab. Some guys are posting, they've got more trades off in the first initial swing than I might take all week. So everybody's different. You've got to trade your plan based on your statistics and your better trade. Here we come back to the IB high again. There's high volume node here from the micro composite, which is the previous MCVPOC at 75. Pretty close anyway. And that, seems to have turned it around. We could start looking, as I was saying a minute ago, we could start looking at a mean reversion. Now, this would be one beautiful outside in, right? Because this is the mean. That's right there where most of the trades happened. So from the outside area, I revert down to here, but you've got several obstacles in the road. The first scale, plenty of range, but the first scale would need to be ahead of the mid. A lot of people don't look at the overnight VPOC. I do, so I would make sure my scale was ahead of that, but that's still okay because that's 4 points up here to the top. At the moment now, if I had shorted right up here, it would be risk neutral or scaled, but that's not really a trigger that I see. It's just a stop around and there's no trigger. A trigger would be that we've tested down, we come back up, it doesn't exceed, and generally or hopefully there's some sort of exhaustion where there's a bunch of contracts traded out here, 50 in this case, and over here, say we get up in here someplace and there's one. Well, that could suggest exhaustion. There's no more fuel up there. Basically what the market's doing most of the time is stop hunting. The fuel is the stops, and that's pretty much what they're looking for, I think, in my view. Ooh, the biggie. 322 stops got pounded right there at the just below the Globex VWAP and above that liquidity. So you see it held a couple of times here, and then they pushed it through and got the stops and broke off. again, the perfect location for an outside-in trade, assuming that the context of the day was short. In my view, it's not. This is a rotational day, and it's definitely not short. We've been up, higher highs, higher lows, more than we've been down, or about 50-50, I guess. But that's not just a slam dunk short. And believe me, that's my preference. So I'm always looking for that. I adhere to the old adage that the market takes the stairs up and jumps out the window down. So I guess that's the reason I tend to short a higher percentage of the time. I trade both sides of the market, of course, but I think, and if I look at my statistics, I tend to short a higher percentage of the time than long. And yeah, that pop would have been nice, 70 to 65. There's 5 points. It would have been easily scaled. Your target would have been ahead of this. Remember that this is the full session VPOC. And this is the mid. So that could have kind of been disappointing if you were only looking at that or only tracking the mid. You might have missed that. Might have missed that target, but that's a nice, that would have been a lovely risk neutral trade. And now that you're risk neutral, you're looking at the POC, which is clear down at 60. So essentially a 10-pointer. 10-point mean reversion. Very nice. And again, all of this is the rearview mirror trading, RMT. It's the narration in the rearview mirror. I didn't take the trade. If I were aware of it at the front end, I'd be in it. I'm not. I'm just narrating what happened, and that's trying to raise my awareness to be alert for these types of setups. I sort of have to get my head around the idea of mean reversion, which just looks like what we're doing today so far. And here comes the the current session VPOC. So there's a migration up, and price pulls back to the VWAP. That would have negated any. This would be, hitting the eject button here. When this happened, if you were targeting lower, that would have been a lovely respite to get out. And it could go down and price check at aisle 3 back down to 60, which it looks like it will. But anytime you have a VPOC migration like that, it's time to be alert because first, the VPOC is the most traded price, right? So if the most traded price and essentially concept of value is moving up, being short should give you pause. looking lower may not be the right idea in the short term. And again, that's the problem with trading, or the magic of trading. What time frame are you looking at? One of the things I've noticed about Bookmap is it's real easy to get wound in real tight. You can get down to, milliseconds, I think, with this thing if you want to. And I have to keep my eye on the bigger picture so I don't get myopic or myopic, however you pronounce it. And we're going to come back down and test that level around 60. So that would have been a fairly nice 8-point maneuver there with a no heat essentially, and a early scale. So there, if you'd have taken this trade in here somewhere, you scaled around here, a little bit of heat there, but only on the scale, not against the stop, and then down off to about 8 points. So that's the way it should be done. Unfortunately, that's not the way I did it. But I think recognizing it is definitely a step in the right direction. Yeah. Basically a 12 handle range so far today. The IB will set here in another 7 minutes or so, I guess. It sets at 9:30. We've extended the IB 30 to the upside after being teased on the lows. And now we're below the POCs, and we've got 7 minutes to the IB set, and we're below VWAP. So, as I said earlier, and then was completely wrong, one would imagine or that the IB low would be a more likely suspect under the circumstances. We open gap down. We haven't tested up appreciably to that gap, close that gap at all. So the old gap rules are that we would continue to sell off. And with those old gap rules, and about $5, you can buy yourself a Starbucks, We migrate down now. So that would be, again, a positive sign if you're sitting on a short with a runner, and kind of lends credence to the IB low being next on the block. I just realized I didn't review the stream last night from yesterday and put in the timestamps or the edit the title reflecting. I try to enter the outcome of the trading of that day in the title so it's easily understood. And I've wondered about putting a numbering system on them. I noticed a few people do that. That's probably a good way to keep track, to inventory them for myself. I think FT71's been doing that trade or buy it for, Jesus, I don't know how many years. I think he's well over 2,000 days somewhere, if I remember right. Murad Askar. Interesting guy. And no sooner do I talk about VPOC migration lower and making strengthening the concept of the IB low, then it goes up above the mid and the full session VPOC, and this is the indicative of a rotational day. Which has got to be a totally different trading plan for in a successful business. I mean, here we go again, back and forth. I'm getting dizzy tracking them, and interesting to note that they're just flopping back and forth exactly between these two VPOCs, right? So still within that 12-point range. We look over here, it's pretty obvious. There's our open, test up. This was our IB30 extension. Didn't get it down here. And here's our total range. Two millisecond delay. I don't know what's going on with IRT today. I notice it kind of lags a bit when I increased the output or the export of the price levels because a couple people were in the T-Lab. I share a link to the price levels from the statistics. These levels here. For folks who don't have IRT, they can just put the link in their cloud notes, and then they have the same as these. Somebody was complaining they weren't updating fast enough. I had them at 1 minute, and I think now I got them down at 10 seconds or something, and that could be something. Think about it. It's updating and exporting those levels every 10 seconds. I'm going to go back to the way it was. If they don't like it, they can get their own IRT. And here we go, looking at that IB high, and it's not out of the woods that we would try to close the gap. We keep testing higher with more gusto than lower lately. We'll set the IB high or IB stat in 2 minutes. The IB will, at that point, the IB high and the IB low will no longer migrate or move with price. And at that point, the stat kicks in, or the IB 60 now, I guess it's called, because it's 60 minutes, that a high percentage of time, well in the high 90s, today's price, current regular trading session prices will take out the high or the low every day. So, what is that anyway? In this configuration of an open lower out of range, the statistic that we will take out the IB high or the IB low is 98.0% of the time out of 2,003 days. So that's a pretty consistent statistic, I guess, isn't it? And that's these statistics here that it's not magic. They are just calculated statistics, straight up math. The percentage of time that price touches one of those levels, looking at the sample, at the data sample, which is 2,000 something days, 2003. That's it. Not magic. Be right back. So I guess you could say that that was a second mean reversion opportunity from this outside edge here down to the mean. And was it within reason? Well, it's about 4 points to the scale. So yeah, I mean, 4 points to the obstacle. So yeah, the scale is okay. And then the target would be lower, but where? VWAP, I guess. If you stop and if you kind of look at it like this low volume area around the mean, around to the next low volume area, sort of assuming that these are two separate distributions, which they are, separated by the VWAP there. That would have been a pretty justified trade. I don't really have a vetted edge for mean reversion. How complicated do you get? Do you look at only instances where it's gapped, where there's a gap, and then there's no closure of that gap? And that's the part that stumbles, where I stumble. It's like how granular do you get on the parameters? But I don't really have a mean reversion statistic for opening lower outer range. And by definition, lower out of range or higher out of range is a gap, right? I mean, that's pretty obvious. But I don't really have a statistic for that. And I would question that anybody does. I mean, I don't know the frequency of that opening type. That would be interesting to see. Well, I can see that one, come to think about it. I think I have that right here in my statistics page. Hold on. So out of 2,003 days, we opened lower out of range 14.8% of the time. 296 days out of 2,000. So to have a 50 instance sample set or sample of that configuration would be pretty impossible. That's 25% of the time out of 2,000 days. There's no damn way that I could have that in actual trades. So that's when you have to revert to IRT or a program that you can code up that instance or those parameters and then run a back test. Because if anybody says they vetted that on their own stuff, I'm calling them a liar, because who the hell's got at least 50 trades out of 2,003 days? Out of 200 days within 2,000 days. I don't think that's the truth. But that's how you would vet the trades. And we're swinging pretty nicely here, back and forth. I will have a call at 10, the top of this hour. I will let the stream continue, and then I'll just step away for that call and get back. I'm real curious to see how this plays out, and I want to leave the stream on in case there's a trade opportunity presents itself that I take advantage of. And yeah, here's a nice pop to the upside, looking for that IB high stat, because the IB stat has been set at 930, wherever that went, back here. We didn't take lower. We didn't take higher. One of these two will be taken out 98% of the time in this configuration. Kind of looks like maybe they're looking at the high. But is that reason to take a trade? I don't think so. If you look over here, and notice that this has been absolutely a rotational day. We did poke at the high a little bit higher. We extended just a little bit towards the gap, but not a lot of conviction in my books. And I got 50 cents says we're going to get the IB stat here in a second. But not confident enough to put on a trade at this point. I'm not taking breakout trades because I think that they represent a FOMO situation for me. And you see, this would have been the mean reversion entry down here, because this is low, the low outside edge, basically the low end of this distribution. So you enter here, come up here targeting the IB high and higher, because there's still that 85.1 up there. The problem with that is you're making a commitment, or you're making a bet that the market's going to move higher today rather than lower, which it has been substantially lower in the last 3 days and gapped way lower this morning. So I sort of figure that's against context. Probably. And I think that trading against context is like swimming upstream. And when they take that IB high, they could very definitely head for that 75 area, the overnight point of control with that high statistic. And that looks to me like going to happen here pretty quick. And this is where a breakout trade would enter. That is the IB stat by a tick. Now, there's also a trade that is viable in this condition or context, which is rotational, and that's the IB failure. The thing that what gives me pause about an IB failure, which is also a mean reversion, is that we've got this big stat bar sitting up here. So, you know. Yeah, so I guess the trade to have gotten on was this outside edge test down here looking for higher ground. The problem is that, you know, what's the scale, what's the range from there to there? 2 points. That's against that rule, kind of. So the IB failure, if I understand it correctly, we've made the IB high here, come back through it, come up under it, tested, and then we sell off. That's a fairly classic IB high failure, I believe. There's 2,000 trades out there. There's 7 there, so there's a sign of exhaustion. 1 and sellers. Now, granted, that's not, you know, anything huge. We're only talking about 2-3 points. You just, if you were spot on with your entry, you'd just be luckily scaled right here. So risk neutral, but that's not any big whopping trade. And I don't know how that, again, with the specifics of context and how they, the interplay, you know, I don't know if the IB failure, I'll have to go back and research that again. How does that apply in a gap down, right? That's, or does it? does it affect it at all, or Jesus. There we go. What's that? Looks like a bomber hit in there for some stops. And now he's going to try to shoot it up to the moon, I guess. This stat up here is definitely intriguing. And if they can get over that IB high, then we've got an IB continuation trade, which would go to that overnight point of control. So, there's a whole bunch of different ways to look at this stuff. I guess that's the part that's confusing, and that where so many people get tripped up, myself included often. So what I intend to do lately now is, I'm just not trading. I'm narrating and watching. But it should be quite obvious from my dialogue here that conflicted, I guess. The IB failure, just got you scaled. Now, if you're sitting in the IB failure and it does this latest move here, you're not stopped because your stop would be up here, but sure would be nervous that it wasn't going to take out that big stat up above. Now the IB failure is looking good again. Yeah, it's these kind of days when there's a fairly close range, 58 to 70, right? So 12 points. And 50, I better get myself organized for the call story here. As is always the case, the timing is everything. I just sign off for the call at 10. And we, of course, head straight up to the target I had spoken about several times on a VPOC migration. Well, there's the VPOC migration for 9:30, and then just here at 10 o'clock, up we go. So, that kind of shot the wad there, and now we're having we've tested that upper area. The profile looks very blunt at the top here without any excess, and that's kind of indicative of an unfinished auction. It wouldn't surprise me at all to see that go higher, but that's where we are. And now we're trading down towards the bottom again, so it's just magic. Or not. More like not. Really frustrating, but that is what it is, and I certainly don't take trades when I'm not focused, talking and doing something else. That's not a good recipe for successful trading. And here we go, looking at a low. Now we've taken out the IB high right here. So there's 940. So there's the IB high taken out there. We tested back to the mid VWAP and then up to that target, 10 o'clock-ish. Now we're looking down here lower, and yesterday was a neutral day. The IB high and low were both taken out somewhere. There's the IB low and there's the IB high. We're both taken out. That's called a neutral day, and we seem to get those in pairs lately, or groups anyway. I think there's a fairly high stat that there's not more than two in a row, but, we've had about three of those anomalies in the past month. So we'll see what we're going to do here with this one. But we're looking like they'd like to take a low. We're below the POC, below mid and VWAP, and below the full session VPOC. Get to the right screen here. We're below the mid VWAP and full session VPOC. We're looking at this low down here, in my opinion. But let's look at that statistic. That might be kind of interesting. So our open condition is lower out of range. All right. That's this one right here. So the statistic of getting both the IB high and the IB low is 4.7%. It's happened. Oh, I'm sorry. That's a 1.5. Oop. Sorry about that. Here we go. It's 33.8%, happening 100 times out of 2,000 total, 3 total days and 296 days where we opened lower out of range. So it's not an unreasonable statistic that we're going to hit that. No entry for me, because that would be a breakout trade. The entry, I guess, would be this test right here, but kind of give you a pause when you had the VPOC shift. It would be anyway. I'd like to get a quick one off, but But anyway, there we have it. So do we come up underneath this POC and test it, and then trade down for the IB low? That would go against pretty much every theory in my trade plan. So I'm not going to do that. That doesn't mean that I'm right, but I spoke of this earlier in this stream and several others. I think probably every day I have a problem. I think trading from the POC that's inside out trade, and that's not a good one. There's a test. Let's see. So there is 1.5, 1 3/4 points. 2 points. Not scaled. Assuming we took that right on that perfect entry. We're not scaled there yet. It's going to take 2175 to scale. So I'll put my cursor right here at 2175 for that line, which is just on, or just a little smidgen above a previous migrating POC. And we'll see what happens if they make that and drive for the IB low and the neutral day. Maybe. Well, we had a bit of a bomber here doing a little absorbing and didn't get very far. Doesn't mean it's not going to happen, but an iceberg, I should say. The icebergs, sell icebergs. These are buys. If I remember my little color, I changed the colors around to try to be a little easier for me to determine. Something that I'm also noticing here, which is, that's my fault. Look how thin the book is. I mean, there's no real liquidity bulking up anywhere except down here above developing value area low, which kind of suggests they will head down for that. There's our level again, our line again for scale, for the risk neutral scale. No heat yet, and no stop, of course, assuming our entry at 4.5, 475. I think it's pretty likely they'll probably take it down, but not likely enough to be a trade for me. And no sooner than I say that, then there you go. So now it's scaled and risk neutral. And the worst that could happen in this situation would be a scratch. And let's see what to do with it. Well, they took it right straight back up. Assuming now that our entry was here at 464.5, we would be 3 above that. So we'd be up there. We'd be above the VPOC, the FVPOC, and both mid and VWAP. So that's actually a pretty good, pretty safe location to be above those levels, except this is kind of the last swing high up here. Well, that's ridiculous. I mean, there are guys that do that, but not this guy. Risk is the most important thing to control. I learned the hard way. To protect your account. Stops are a good thing because they protect your account from the wrong. It's not the wrong decision because every trade has a 50-50 outcome. It's a random market. So you use all these things that I talk about, context and levels and statistics, and you put on a trade because of those things, which you hope skews the outcome a bit in your favor, but you have no idea. That's why a vetted statistical edge is so absolutely important. It doesn't matter if you take a stop or if you don't. If you take the edge every time, the setup with the edge every time, the probability of long-term success is pretty much given because it's statistical. So we're scaled. It would have been scaled. For me, I would say the trade I was looking for today was that move upside to these statistics, which happened while I had to be off stream. So now I will just be patiently waiting and watching. So we bounce along here. Had we entered that test, we would just be scaled there, assuming the entry was perfect. My trade I was looking for happened just at 10 o'clock, and I will be closing the stream off here at the top of the hour. I decided yesterday, rather than a big 7-hour story like I've done a time or two for the entire market, I'm going to do a morning stream and then an afternoon stream, assuming that I am in a place and see enough I am interested enough in the action that I might place a trade. The goal of being that I don't want to have any trades off stream. And of course, having said that, then all the great moves are going to happen between 12 and 1, right? That 7-hour trade was painful. I did do a timestamps and chapters, but it's pretty painful. I wouldn't expect myself or anybody else to sit and listen to 7 hours. So another 15 or so minutes, 17 minutes, I'll wind this stream down and will not have taken a trade unless something happens surprising in the next few minutes. I won't take this trade because up here was more or less, you could argue a point that was a trigger or, but this has taken the middle out, which is not ever a good plan. So, and it may run 20 points from here. Who the hell knows? It's now through that's now through the scale. Would have been about there. And looking for that IB low, which would be the target, actually. Or just below it, because that'll usually run past a little ways. And we're now at the developing value area low. So, yeah, it was a viable trade. The good trade would have been here. These tests up where it couldn't get higher than that VPOC, and then short would have gotten a scale off here and be long for 10, 15 points. That would have been the second trade after the 10.45. And look at them bounce that value area low, developing value area low. I should be specific. Here, this is developing value area for today. The value area low, value area high are from yesterday, RTH. And even these streams without trades in them for 3 hours is pretty painful. They're good for me to review, but I can't imagine would hold a lot of interest for someone else unless they want to understand my theories for whatever reason, or my strategy and trading ideas. Again, the point of the stream or the goal of the stream is my video trading journal. So for me, it's perfect. A little hard to get used to talking all the time. And they're teasing over here. They're teasing. It'll pull up, of course, to the POCs there somewhere in an area that I wouldn't trade. Just going into 12 o'clock, and then bottom will fall out, of course. But hey, the magic of trading. So they never made it past our scale to a target. We are risk neutral. Now we're getting back to our entry. And VPOC. Oh, these things just do all this magic stuff. Computers never have a problem. Yours didn't just crash. But your computer. Here we are back at the current something doesn't look right here. And I'm not sure why. See if we get an update in 2 seconds here. This, I don't see a migration of this POC on screen. This is the RVPOC, and this is reflecting as indicating the RVPOC. So this should be up here. And there's no migration. So something is kittywampus here. Well, it did migrate there. And when I said give it a couple seconds. So that's, but why was that the case? That was a little duck and dive that didn't get transposed, and I think I know why. If you look at the Rinco, this line, the yellow line, is a developing value area POC. So look at this goofiness here. We come over here and we get the same goofiness down here and then back up. So this little jog was probably in less time than the updates from the IRT to Bookmap, and similarly here, because neither one of these jogs are reflected in the Bookmap. POC, and as a result, I didn't catch them over here. I didn't catch them over here because I normally flag them up when I see them move here, rather than keep an eye on the IRT to such a level. Well, that's kind of disappointing. Interesting. Yeah, so 5 minutes to the top of the hour. And I think that I will very definitely be upset that I didn't take that. Wasn't available for that 10 o'clock trade. But we'll pull the stream down at 12. And assuming there's interesting action after that, I'll revisit. Up they go. So we're heading for scratch territory here, assuming that we got our entry spot on, our scale right here, and we would be then just above this area. Say we're at 64, let's make it 64.5. And 3, 67 now. There, that would be our, this would be our break even or scratch area, the 64, 67.5 line, at the mid basically, just above the mid. So that would have been a scratch, looking for that IB low or the neutral day trade. Well, not yet, but getting right up there. Not far to go. And exactly why I try to not take trades with not a lot of range. Not saying that I don't get stopped frequently, because I do, but that's just trying to skew the stack the deck a little bit in my favor, I guess is how you look at that. Boy, look at that. Now that would have been a clincher there, you know. A tick away. Like that old Rolling Stone song, just a tick away. That would be a good track to have when that happens and play that. I'm going to have to start doing fun stuff like that to amuse myself these times when 3-4 hours standing here at these. I don't sit. I have 2 standing desks, L-shaped, and I don't even have a chair in my office. So I never sit down. Wow, that would have been a real clincher. Surprisingly, though, in the last, I don't know, month or so, using the multi-bracket as I described earlier, you can't set both stops equally. So I have one at 12 ticks and one at 13. Normally, I would just, the minute the trade's on, you can bring them together, no problem. Lately, I think it happened because I had not moved it yet and this occurred. So I've just kind of left them at 12 and 13 to see what happens. A surprising number of times in the last month, and I could go back and count them probably if I were so motivated, it will take out the 12 tick stop and not the 13th. So 1 tick. Does it always go that way? Does it go then reverse around positive? No, not always. Sometimes it'll do this. It'll waffle around and up and down, and you think you're going to be quite clever and that you dodged the bullet, and then it goes up and smacks you for that other tick. But it is pretty amazing the number of times that 12 ticks gets taken out, the 12 tick stop gets taken out, and the 13th tick doesn't. I'll show you what I mean by that here. When you set up the multi-brackets, which is here, there's 12 ticks, positive, 1 target. That's the first target. That is the scale to make your risk neutral. Here's the second target. The stops are 12 ticks and 13 ticks, 1 scale and 1 scale. You can't have them both set at 12. It won't accept that. That's what I'm talking about. I'm experimenting with something here. No, I didn't change. Okay. And now what are they going to do? Get that 13th stop. Get that 13th tick. Come on. Still in the trade. Haven't scratched yet. Within a tick. 67.5 is the tick. 67.5 is the scratch right there. I suppose you can draw lines and stuff on this thing. I don't know. I don't ever do that. I just trade real basically. I don't do all the annotating, and I'm sure there's a zillion things this software does that I have no clue about. Boy, there you go. That's about as close as you want to get right there. That's actually There you go. I think that would be considered a stop. I think that's this little guy right here would have taken it. I think. Close, real close. Well, pretty weird. Pretty weird. To quote Austin Powers, your Pfizer. Must be really fun to be. Get paid a huge amount of money for doing something you really love to do. Tom, I think, does that with trading. And that's the goal of everyone, of course, is to be in that position. But I'm at that point, when I said that, I was thinking about entertainers. Like, imagine the fun the Stones have. Christ, they're all in their 80s. And they're, having more fun than a barrel of monkeys and making money hand over fist, and have been doing so for years. I don't know how long the Stones have been together, but ZZ Top were a group, even with Dusty Hill still alive at 50 years they've been together, touring together. God, must be quite an experience. Admirable, whatever you say, experience. There we go. Now, by golly, there's the scratch. Now we're scratched. So that long ordeal right here, looking for the IB low neutral, resulted in a scratch. We scaled here, wherever it went. We scaled here. And then this would not have been our target. That would have been this IB low. And so now we're trading back up across it. Anybody that got down here and thought they were going to get a mean reversion up is pretty happy with themselves. And that might have been the better idea, to take this entry as an asymmetrical trade with a stop just right here, never mind 3 points. Wouldn't be able to go into the database had it stopped out. If it didn't stop or take heat, I guess it's okay. Guess it would have been okay to do. And so I'm going to wrap the morning session for 17 Jan 24. If something magical happens after 1 o'clock, I'll restart the stream. I'll do the afternoon. And it'll probably fall out of bed and make a new low here at the minute I turn it off. But anyway, all the best. And if not later this afternoon, we'll talk in the morning. Thank you very much.